The fourth turning's impact on financial markets. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, we welcome back Dhruv, who wrote a really thought-provoking article today about the bigger picture of the fourth turning, what it is, what we can expect, and how we can take advantage of it with gold and silver, including in digital form by using our gold and silver standard tokens. How are you going today, Dhruv?
Good, Chris. Thanks for having me back on.
Thanks for that article today. Now, really, lots of interesting stuff in there. I know you've covered this before, and I know a number of people will be familiar with it, but can you start us off again by just reminding us what the fourth turning is, and particularly where we are or how this current fourth turning potentially compares to what we've seen in the past?
Absolutely. The fourth turning is the fourth phase of a macro 80-year cycle, where each phase is approximately about 20 years. Now, each phase has its own characteristic archetypes for culture, society, each generation, if you will. And then there are certain predictable outcomes of those generations. So the digging into specifically the financial side of things, the fourth turning is usually a period of big systemic changes. And anytime you're going to have big systemic changes, there's usually a lot of chaos involved with that. That means that there are probably broad-based financial collapses that one can expect during this phase of the macro cycle. So the previous fourth turning was actually the Great Depression. And cyclically, that's back to where we are right now. So looking at where things might move forward from here, we can learn a few lessons from the previous fourth turning. Now, things are not going to be exactly the same. So history, it's not going to repeat exactly, but it often does rhyme. So that's essentially what we're looking at in today's article.
And when you mention, big systemic things changing, it certainly feels like that at the moment. I think everyone would agree that there's a lot going on in the world, whether it's sort of from the tech side or, political, cultural, like all of that stuff is certainly feeling like there's a lot of flux happening. When you bring it back to gold and silver specifically, I think you're trying to make the point, at least, that gold and silver have served that role consistently to really be an area that you want to be looking at during these fourth turnings. I mean, you reference it, and you said this before as well, as God's money, this idea that it's like something that just sits there outside of time, outside of what's going on in, the day-to-day, probably what we consider the turnings, what's going on in our day-to-day lives, that just serves a purpose, particularly in this environment. Is that a fair read? And how do you think about gold and silver in this particular environment?
Certainly is. The reason I use the term God's money is because gold has the characteristics of being consistent, reliable, and more or less eternal, because it's been used for thousands of years as a form of money, as a store of value. Entire civilizations have come and gone. Empires have risen and fallen, and gold and silver still hold their value. So certain currencies don't even exist anymore. But what you could buy with gold at that time in that empire, you can more or less buy the same thing with the same amount of gold today. So that level of consistency is certainly what you're looking for on a macro level over hundreds of years. And so when you're moving from one 80-year cycle into another 80-year cycle, you really want something that's unaffected by humanity, by culture, something that isn't attached to any specific empire or what we refer to today as a government, something that is decentralized in that sense. So there's no counterparty risk of a government or a financial institution of any kind. And I think the reason that gold has served this purpose for thousands of years is just because of its fundamental properties. So it's got 6 properties that classify it as money. It's durable, so you can leave it at the bottom of the ocean for 2,000 years and it's still going to be the same thing. It's portable, you can move it from A to B. It's divisible, so you can have smaller units. You can use it to get change, buy things of smaller value. It's homogeneous, so it's uniform. This ounce of gold is the same as that ounce of gold. And the final 2 properties are probably the most important here. It is something that is limited in supply. Unlike currency, and every currency eventually goes down to its intrinsic value, which is 0. And the reason for that is because currency has unlimited supply. So they keep printing more and more of it. Gold has limited supply, so it's able to hold its value. But that leads into the final point, which is that gold actually takes energy to produce. So there's the energy that goes into the mining and the refining of the gold. Versus currency does not take any energy to produce. It's literally typing numbers into a screen. There's not even any printing of notes that much anymore. So what that means is that the energy that it takes to get the gold to you is held in the gold in itself from an economic energy point of view, and that gives gold intrinsic value. So because currency does not take energy to produce, it does not have any intrinsic value. And that means that while currency is useful up to a point, on a long enough time frame, it does return back to its intrinsic value. It's just the law of nature. And gold returning back to its intrinsic value is completely fine because gold has intrinsic value. So while there might be fluctuations of supply and demand, as there is with any asset, the intrinsic value of gold is what allows it to continue for thousands of years being used as money. And it's been used, before the current civilization. It will be here long after the current civilization. And that's why I refer to it as God's money.
It's such a good way to look at it. I think the other question a lot of people watching this will have is about silver. And often we say silver can be sort of substituted for gold, maybe with a little bit of a extra risk premium, where it sits in the role that it plays. But you mentioned specifically in the article the gold to silver ratio, and you talked about it through fourth turnings and how it works in that environment. Can you maybe step us through that a little bit? Because I know a lot of people are really interested in silver, potentially as more of a potentially higher return play on the underlying gold play.
Definitely. So silver will still give you the same value proposition of gold. It's decentralized. It's not attached to a government or a hedge fund. It has intrinsic value. It's got the properties of money. So it does provide you an opportunity to sidestep the transition from one system to another and then re-enter it while preserving your value. The additional benefit of silver is that it is a speculative asset as well. As far as precious metals go, it does have an element of being a growth asset as well as a safe haven asset. The reason for this is because people feel like silver is highly undervalued, especially in today's modern world where it's got a whole heap of industrial use cases across military, medicine, and anything to do with electronics, which is becoming more and more prevalent every day. So people feel like they can get the safety that they get with gold, along with a little bit of speculative growth on the capital value that they would get above and beyond what they normally get with gold as well. So the idea of silver is that silver buyers will often track the gold to silver ratio. What that is how many ounces of silver will give you 1 ounce of gold. It's currently sitting in just about 80. So 80 ounces of silver giving you 1 ounce of gold. Once someone has purchased their silver, they'll keep an eye on this ratio. And when the ratio falls off, so let's say it's gone from 80 to 40 ounces of silver is now giving you 1 ounce of gold. So you've essentially doubled what gold you would have gotten should you have just gone straight into gold. Now, generally, the way these things work, at least historically, if you just look at historical data, is that when we're going through the transition and markets are collapsing, people are looking just for the safe haven. They're not interested in squeezing every ounce of speculation and growth out of assets. So gold will start outperforming more or less everything else out there. What happens following this is people see a secular bull run in precious metals. They start believing it, and then they start piling more into silver. So gold and silver will move up together and move down together. But generally, initially, gold will outperform silver. However, further down the track, silver starts to outperform gold quite significantly. So if gold's gone up 10%, silver's gone up 20%, silver's essentially catching up to gold. And that's when you see the gold to silver ratio actually starting to fall off. So people will get into silver, position themselves in early on. They will keep an eye on the gold to silver ratio. And as the gold to silver ratio falls off, they'll start trading their silver in for gold. And so then they've got a safe haven asset, capital growth. All the while, you see other markets starting to collapse, housing, stocks, and more or less everything else out there struggling. You might see broad-based financial systems collapsing, like banks and hedge funds. And here you've got an asset that's providing you shelter from the storm and capital growth as well.
Certainly has a lot of extra benefit there for people who are looking at that, even if it's just part of their portfolio. It's not necessarily saying it's all of it, but you get some of those extra benefits potentially on top. Turning topics slightly, you mentioned in the article, which I thought was really interesting, that lots of other things can happen. And you highlighted this sort of at the start, that during this period of time, we can see a lot of turbulence, a lot of upheaval potentially. Can you maybe just step us through some of those? Like what are you potentially seeing, particularly in that financial and economic space? What are you seeing that could be coming out of this?
There's a lot that's happening already on the table in terms of where things are moving. Um, so that's, there's a lot to cover there. A good comparison would be actually comparing it to the previous fourth turning, which was the Great Depression. Great Depression lasted from about 1929 to 1939, and that led straight into World War II. So I think while things are not exactly the same, in fact, there's a few fundamental differences in terms of economic philosophy and policy. Back then, it was a lot more fiscal policy dominance. So that's a focus on government spending and taxes. That's mainly driven by government legislation. Today, we have a focus mainly on monetary policy. So you're looking mainly at the economy being driven by central banks rather than government. And you're looking at policy mainly focusing on money supply, so liquidity, as well as interest rates. So it's the way markets react and respond in these sort of crises quite different. The Great Depression lasted 10 years. The GFC, the global financial crisis, lasted about 2 or 3 years because you see central bank intervention coming in and really starting to change the dynamics. I honestly think that is not necessarily a long-term solution in terms of central banks coming in and shortening something that should naturally last 10 years to 3 years. I think it actually worsens the problem in the long run. And what that means is when the collapse eventually does come, it's probably going to be worse. So, if you keep the party going for too long and through artificial means, eventually you're going to have to pay the price for it. So what's different in this time is the initial reaction of markets across the board were shortened and then artificially held up. So we didn't have a natural 10-year long recession like we should have had. And potentially where I think that's going is that the following collapse that eventually does come might even be worse than the Great Depression. So it's the way the ebbs and flows of the collapse are quite different because of the fiscal policy dominance, the monetary policy dominance that is led by central banks. And then the way society is structured in terms of technology is completely different. So we seem to be moving to some form of digital currency. Whether that completely dominates society or not is yet to be seen. So there's a lot of speculation around where things could go. There's massive amounts of progress with artificial intelligence, whether that leads to some sort of universal basic income, and how things are going to look. Really anyone's guess. You can make an educated guess on it, but you have the railroads and the industrial revolution previously. Now you have the intelligence revolution with AI and things like that. So it's where things are going will be interesting to say the least. But in terms of the overall structure, they should be quite similar. That we will see a collapse of financial markets leading into some kind of new system, whatever that may look like.
And that probably leads me to my last question, because you also talk about decentralized assets. And, I mentioned at the start, we have the gold and silver standard. So we've got digitized gold and silver, which is our, not knowing what the future is going to hold, but our attempt to be prepared for that by having, assets that can operate in that environment. What's your, sort of wrap this up, what is your take on that? Do you think that things like decentralized assets, cryptocurrencies will have a significant role to play navigating through the financial disruptions that you've been describing here?
I think definitely. So there's two aspects to that. In terms of decentralized crypto assets, Bitcoin is definitely an interesting one to look at. It also has those 6 properties that gold has. And It's hard-coded into Bitcoin. So arguably, it's the perfect form of money. Exactly how it's going to perform in that sort of environment is yet to be seen. We've got thousands of years of data for gold. So looking at an 80-year cycle makes a lot of sense. Versus, we've got 15 years of data for Bitcoin. So how it's going to do in an 80-year cycle is yet to be seen. It would be very poetic for Bitcoin to be created in 2009 and then to come of age, so to speak, during, by 2029, during the broad-based transition. So I'm certainly hopeful about assets like Bitcoin, but that's still speculation, yet to be seen. It's very, very promising at this stage. Assets like tokenized gold and silver is something that I'm really excited about for a couple of reasons. Now, while we were on the gold standard, we had currency units that were backed by gold, hard assets that have intrinsic value. And what the currency units did for us is provide an element of portability and divisibility to gold to basically upgrade it, which gold in itself is limited in these two areas in terms of getting it across and divvying it up to fractional units to a certain extent. Now, that when we went off the gold standard, what that meant was that the benefit that gold got from the currency units, gold lost that benefit. And the benefits that the currency units got from gold, which is having intrinsic value, taking energy to produce, the currency units lost that. And what that meant was it's essentially led to massive amounts of asset inflation, the wealth gap increasing, all sorts of corruption, politicization of currency units, using the currency to hold up economies that are failing, and essentially serving populist political aims using currency units. And so the gold standard is an answer or an antidote to corruption. Now, gold and silver tokenized on blockchain is exciting because the same benefits that gold got from currency, which was portability and divisibility and instant settlement, internationally, can now be bought back using tokenized gold and silver on blockchain. So what that means is you have a grassroots resurrection of the gold and silver standard thanks to blockchain technology. And that's incredibly empowering for individuals. So if I want to have a wallet on my phone with gold on there and I can use that gold for spending, essentially what I'm doing is I'm using the gold standard. And I can pay for things with instant settlement internationally using digital blockchain technology, which is immutable, it's transparent, and it's instant. So that's really exciting. Now, whether Bitcoin has a role to play in the future, we'll find out. Gold is eternal, so I know it will have a role to play in the future. And if we're moving into a digital currency and we're moving more and more towards blockchain technology, I actually think digital gold and silver, tokenized, hard assets, is probably where there's a massive opportunity in the future for everyone.
Look, we'll leave it on that, but I think people are going to have to go back and watch this again. There was so much useful information in this article today and in the presentation that you've just given. Really fascinating stuff there to look, when you zoom out a bit, look at that fourth turning picture, but also the role that precious metals play, the role that potentially crypto plays as we move forward in that. So much useful information. Thank you so much for your work on that today, Drew.
Thanks so much, Chris. Always great to chat to you. Talk to you soon.
Great to chat to you. Thanks everyone for watching. We'll chat again soon.